Hey, what's up, guys? Welcome to Accounting with Karim, and this is transaction number 5. So, in transaction number 5, the owner purchases advertising services from a vendor for $250 on account. And remember, on account means on credit, so that means they will pay later on. So, this is a liability. Anyways, let's look at how this transaction affects the accounting equation and also the accounts that are impacted by this transaction. Okay, so we have purchase advertising expense for the month of January. So let's make that distinction. So this advertising services that we're purchasing is is for the month of January. So we're using the service today or for this accounting period. So it is an expense. If for say example we purchase advertising for the next like 7 months, this will be an asset called prepaid asset because there's a future benefit to what we purchased. And so because this doesn't have a future benefit, it has to be an expense account. So let's look at the two accounts that are impacted by this single transaction. Okay, so the first account is advertising expense. And so that's the debit to advertising expense. And also, so we owe this money because we're not paying for this service today. So we owe the vendor, so that's the accounts payable. So accounts payable also went up by $250. So that's what we have here. And so those are the two accounts that are impacted by this transaction. Let's look at the accounting equation and the impact on the accounting equation. So liability went up by $250. So $250 right here goes up. And owner's equity went down by $250. So remember, expense is a component to owner's equity because expense is a part of your income statement, which affect net income or net loss. So the expense will actually affect the owner's equity. So owner's equity went down because expense is a reduction to owner's equity as the opposite is for revenue. Revenue is a increase to owner's equity, right? So if expense goes up on your income statement, that means owner's equity is going down. So that's a reduction to owner's equity. And so at the end of this transaction, there should be a zero effect, right? Because the asset side of the asset side is not impacted by this transaction, okay? Only the liabilities and owner's equity. And so what we have here is that owner's equity went down by $250 and liabilities went up by $250, right? So that's a zero effect. So at the end of this transaction, uh, both sides of the accounting equation should be the same as it was in the previous transaction. So $7,800 for total liabilities plus owner's equity, and $7,800 for total assets. So that is it for transaction number 5. I see you guys in transaction number 6. Cheers.